Hey everyone, and welcome back to the show. So, there's actually a lot that has been happening on the stock market over since the year has started. So, it's been falling a lot, and a lot of stocks that you'd expect to do traditionally well and typically well during the first week or so is actually going down as well too. So, with all that risk that's happening in the market and with everything that's happening, just decided to really take a different approach in today's video and just look at really Pfizer. And the question that I really had that came up was, is Pfizer a gold mine in terms of dividends? And is Pfizer the best dividend stock on the market? And so I'm gonna go through what Pfizer has been doing, how the dividends that they've been paying over the years, and I'm also gonna give you a secret as well with dividend stocks. So stay tuned to the end of the video for that. So dividend stocks really are stocks by definition that pays consistent dividends over a certain period of time, whether it's years, decades, and these stocks usually pays high dividends. And dividend stocks are usually companies that pays dividends usually every quarter. So you know, when you buy into certain companies, you know that you're going to be expecting dividends from them. So when it comes on to really investing in dividend stocks, you know your main goal is not for capital appreciation, but really how much cash you're getting back from that investment. So you're less concerned with the stock price and more concerned with dividend yields. And dividend yields really is just the annual dividends paid divided by the current share price. So right now, Pfizer has been doing phenomenally well in terms of their dividend payout. So Pfizer has been paying dividends every single quarter since 1980, and that's as far back as the data goes. So I think issue with Pfizer actually was founded by two immigrants who came from Germany back in the 1800s, Charles Pfizer and someone else. So they came to United States from Germany, and to two immigrants, and they formed Pfizer, and they decided that they wanted to start a pharmaceutical company. So they did that. They started creating drugs and different things. So they created like the vitamin C's and ascorbic acids, those sorts of stuff. That was the first sort of pharmaceutical products that they actually had created. So the first drug that really did really well for Pfizer was the miracle drug, and that was really just penicillin that they created, and it was really for World War II victims. So the soldiers from World War II, it was just created for them mainly. And fast forward back in 1998, they actually had created Viagra, which probably is that one drug that everybody knows them for. And so Viagra did tremendously well in the late 90s, early 2000s, that sort of stuff. So why am I telling you this? Well, it's gonna tie back in really soon. So Pfizer actually had the best and the worst dividend payments in 1990s. So by 1991, Pfizer paid best dividends, and that was 66 cents a share. And then by 1999, they actually recorded their worst dividend payment ever, which was just 8 cents a share. And so when you look at the 1990s now, this was really when the dot-com bubble was form. And for those who aren't familiar, dot-com bubble is really just the internet age, and so a lot of internet companies or internet focused companies came on the market, and a lot of them were being pushed. They were overvalued. They had a lot of IPOs, and then towards the end of the 1990s, this bubble started bursting, and by the early 2000s, there was this huge crash, and a lot of these internet companies actually closed down or were bought out by other companies, and now we're left with just Google, Safari, Mozilla, Firefox, Bing, and a few others that probably weren't around at that time. And so the reason why I say all of this was that 1999 was the worst year for Pfizer in terms of dividend payments, and this was right before that bubble had burst. So it would have really affected them in terms of the amount of funds that they would have been able to really pay out and really give back to the investors. And also, like, back in the 1991, that was actually one of the best years for Pfizer as well too, because it was at that time when they recorded their first $1 billion in terms of revenue, and the net profits had actually grown by about 43%. But by 1999 now, their net profits actually only grew by about 19%. And so because of this date and the bubble that was happening, it really dampened things for the company. And if you really look at the data and you look at Pfizer and how they were performing, it was really during the internet era that they actually exploded the company, because they were now able to reach a wider audience that they would not have been able to reach before the actual internet age. And so the internet really did wonders for Pfizer. And something that I actually realized with Pfizer was that since 1980 up to present time, Pfizer has not missed one dividend payment. They have not. So they may have fallen in terms of the amount that they pay, but every quarter, every year, for over 50 years, Pfizer has constantly paid dividends, and their dividends has actually fluctuated in the early parts, in the 1980s, 1990s. The dividends were up and down a lot. So it was at one point they were paying 39 cents, another point they were paying 17 cents. So it was really up and down in the beginning stages. But then towards the early 2000s now, they actually got a little bit more constant in terms of the amount that they were paying. And a tip to note as well too was that during the financial crisis that occurred, Pfizer actually was still able to pay dividends. So in 2007, Pfizer actually was paying 29 cents per share. By 2008, they were up to 32 cents a share. And remember, 2008 is when the crash occurred. And the dividend was not affected for the entire year. So they were paying 32 cents a share on dividend. So if you held Pfizer during that 2007-2008 financial crisis that occurred, you'd have still been making money on the stock because the dividends were actually being paid. And by 2009, that was when the dividends actually took a downturn and a hit. And so by 2009, Pfizer was actually paying only 16 cents per share on the dividend. So the first quarter of 2009, they actually paid 32 cents. And then from the second to the fourth quarter, it was only 16 cents that they pay. And here's where it gets interesting. So Pfizer actually was able to increase their dividends by 2 cents a share every year from 2009 up to 2020. And then by 2020, they only increased it by 1 cent per share up to present. So they increased their dividends from 16 cents a share all the way up to 38 cents a share by 2020. And then from 2020 upwards, they were only going up by 1 cent per share. So it went up to 39, 40, 41. And right now, for 2025, they actually have announced a dividend payment of 43 cents per share, which shows that over the past decade plus, the company has allocated resources, has actually focused on giving back to investors, not allowing that slip to happen in terms of their dividend payment. So, I mean, during the 2008 financial crisis, during the dot-com bubble that burst, they could have easily said, we're not going to pay dividends for a quarter or two. But they didn't. What they did instead was they took the strategic decision to actually pay less. And then when they were able to get their finances back, they were able to sort out everything back in-house and get the revenues back up and the profits back up. Then they increased the dividend payments as well. And so right now, if you're looking at it, the dividend yield for Pfizer is actually at about 6.4%. So what that means is that if you have $1,000 invested in the company, you're going to get back a gross return $64 on that $1,000. And this is why I say that Pfizer might actually be a dividend gold mine. And so, you guys ready for the secret that I promised you at the beginning of the video? So, when it comes down to investing in dividend stocks, you actually are better when the stock price goes down, because the secret is if stock prices fall, then the dividend yield increases. So look at it this way. So at $26.86, which is the current market price for Pfizer stock, and a dividend yield of 6.4%. And the outstanding shares is about 5.6 billion units. So if Pfizer were to fall, let's just say by the end of the month, from $26 to $20, then your dividend yield would actually have increased to 8.4%. Well, that's the secret. When you're buying dividend stocks, you really want to get it as cheap as possible. So if you're investing in a company and the stock is a dividend machine, it's a dividend stock like Pfizer is right now, or has been over the past 50 years plus, then you want to ensure that you're getting it as cheap as possible. So when the stock price falls, you're buying more. And when the stock price rises, naturally you hold. And as soon as it falls again, you'll be purchasing more as well. And so that really is the secret to investing in dividend stocks. So you focus more on the actual returns that you get and less on the share price. And you really want to purchase the shares as low as possible, because it means that you're getting more money for the amount that you invest. So if you have not yet begun that journey in investing in the stock market, now is the perfect time to start, with the market actually as low as it has been since the year started and how it has been so far. And Pfizer has actually been a dividend gold mine. They have been paying constant dividends since 1980. And yes, the dividend price has fluctuated. There are times when it went as low as 8 cents a share back in 1999 and 66 cents a share back in 1991. And this would be due to the dot-com bubble that occurred and the whole internet age and the internet era and everything being pushed. And so this would be a great entry point for anyone into the stock market. This is not financial advice. I don't give financial advice. I just are recommendations, but I do speak about things that I believe you should really consider adding to your portfolio. And like everything else, do your own necessary research and speak with a licensed financial advisor before you actually do make that purchase, because at the end of the day, it is possible to lose money in the stock market. And one last thing with Pfizer before I go as well too. So the current dividend yield right now is actually much more than the inflation rate and the average mortgage rate right now. So at 6.4%, you're earning more than what the banks are earning with the mortgage. So if you were to go to the bank to purchase a house, you're paying around an average of 6% for that mortgage. If you took that same money and you invested it in Pfizer, you're earning 6.4%. And so you're actually outperforming the banks in terms of their earnings. And to me, that is a very big deal, that the dividends paid by a company, the dividend yield is more than the actual interest rate offered on the market. And right now, interest rates are very high. So if you have not entered the stock market now, is a great time to start. So that's all for today's session. Thank you all so much for tuning in, and I just ask you to give us a thumbs up, a like, leave any comments you have down below, share this video with a friend, family member, relative, someone that you know, so that we can really grow the platform, spread the message, and get it out to as much persons as possible. And just remember, with everything that you do, always do it in moderation, be consistent, because consistency is the key to growth, and the consistency is the key to actually achieving your dreams. And until next time, take care, love you guys, bye. And one last thing with Pfizer before I go as well too. So the current dividend yield right now is actually much more than the inflation rate and the average mortgage rate right now. So at 6.4%, you're earning more than what the banks are earning with the mortgage. So if you were to go to the bank to purchase a house, you're paying around an average of 6% for that mortgage. If you took that same money and you invested it in Pfizer, you're earning 6.4%. And so you're actually outperforming the banks in terms of their earnings. And to me, that is a very big deal, that the dividends paid by a company, the dividend yield is more than the actual interest rate offered on the market. And right now, interest rates are very high. So if you have not entered the stock market now, is a great time to start. So that's all for today's session. Thank you all so much for tuning in, and I just ask you to give us a thumbs up, a like, Leave any comments you have down below. Share this video with a friend, family member, relative, someone that you know, so that we can really grow the platform, spread the message, and get it out to as much persons as possible. And just remember, with everything that you do, always do it in moderation. Be consistent, because consistency is the key to growth, and the consistency is the key to actually achieving your dreams. And until next time, take care. Love you guys. Bye.